Greetings, Jonathan Camarda, your humble CIO. Hopefully everyone is getting set to enjoy family as we head into the Thanksgiving Day swing as the holiday season continues to move at full steam. So just wanted to give a post-election mid-month update here before we see you one more time before the end of the year. So where is the market going, right? We had a nice bump, through the month of November here. Asset classes that are doing pretty well are your financials, your discretionaries, which have all year long, but don't look now. Energy's moving up. Okay, the energy sector is starting to surge, and what has recently started to plummet is healthcare. Now, not getting into the macro political themes of those, except that those asset classes, again, are they overdone? Will they revert? We'll see, but that's what we're seeing now is energy surging, healthcare certainly plummeting at this point. Another divergence that we're seeing is gold, which has had a great year. We've talked about it here on this podcast, and gold is hitting a wall and starting to go down. Not unlike this time, 2016 into 2017, interestingly enough, with Bitcoin almost a negative 0.9, which is almost diametrically inverse of a relationship as Bitcoin is going up as gold is going down. A lot of money perhaps shifting. Now, again, for some of your clients out there, as you know, in our conservative strategies, you have some gold already in those, as well as more aggressive strategies that you already have had some of that exposure to Bitcoin as well. So again, depending on where you're located on your risk tolerance, you may see, again, some exposure in these asset classes. As far as the markets now, we just heard from the Fed. And again, with CPI and PPI coming in line, but inflation is still moving higher. In fact, Powell just said we're looking at somewhat of a bumpy road here. Not to quote old Betty Davis, where it could be a bumpy, belt yourself in, could be a bumpy night, rough ride. And so inflation's a little bit interesting here. Manufacturing data out of New York came out pretty robust, so we shall see. But we have seen Treasury yields, right, the 2-year and the 10-year bouncing, from in the threes to, again, about 4.33 on the 2. And about 4.44 and change. Don't quote me down to the standard deviation on the 10-year. So both of those, again, pushing towards maybe mid-4s at this stage. We shall see. And of course, when yields are bouncing, what else is going higher, right? Maybe not your NFL betting account, your dollar index, right? So the U.S. dollar has been surging, just been on a rip mode versus the euro, the yen, the CAD, Canadian dollar, the AUD, Australian dollar, pretty much across the board. And again, when the dollar is moving up, yields have been moving up. Equities have held in until this week, right? We saw a little bit of a hit there. So again, we talk about this again, 101. Am I handing out apples here, or are we handing out F's, right? In class, dollar goes up, rates start going up. At a certain point, stocks hit that brake pedal, right? We hear the proverbial meet, right? The old roll runner, before things go off the cliff. Now, when we start to look at valuations of stocks, not extravagant, but at a P/E ratio just above 22 for you quant wonks out there, that is a high we haven't seen since the spring of 2022. How meaningful it is, really don't know at this stage, because we look at earnings per share growth globally. U.S. is trouncing the pack globally. Probably not a surprise over Europe, and I think you might have heard some struggles in China. The U.S. is head and shoulders above the world, the prettiest house in a somewhat beaten up neighborhood economically. So the market's still, depending on the sectors you're looking at, pretty reasonably priced, but certainly expensive in others. Now, the other thing to look at as well is that, really for the past few months, small caps and mid caps have been outperforming. We saw a little bit of surge from early November after the election, and small caps starting to come down and giving up half those gains. Large cap value this last week was actually the leader. Go figure, right? The tallest lighthouse in the fog. So we shall see again to see what that looks like. Again, generally volatility September, October. Post-election, regardless of which color you're rooting for wins, generally the screen is green, but we haven't had that pullback September, October. Are we seeing it this month? Macro conditions ripe for that. That being said, when we look at the National Association of Active Managers that we look across the screen, those are tactical institutional money managers out there, people that know, or at least they like to think they know what they're doing. It's still at 90%, so still pretty high. Equity inflow has been pretty high as well. However, the smartest guys and gals in the room, the options traders out there, put the call ratio, right? Shorts versus market versus long, had a little bit of a spike here, although nothing out of the ordinary from a macro view of that chart. With all that being said, let's see if the market can be more of an eagle and continue to soar, generally during a seasonally strong time of year, or will it resemble what's on every one of your tables, or most of your tables, a turkey come the end of the month? We shall see. Either way, we are spinning 360 at 2 speed on that lazy Susan with a 360, and we'll be eternally vigilant. You stay frosty. Enjoy whatever you like as far as your meal, and again, stuff yourself. But let's stay cognizant of what's going on. Again, risk appetite. If that does change due to individual circumstances, contact your personal wealth advisor. Myself, proactively reaching out to my clients all the time on that. Also, required minimum distributions. Easy for me to say. I was going to pull an Arnold. Required minimum distributions, RMDs, right? So again, we're starting to get to that point into November, into December. Want to stay ahead of that, as I have with a lot of the folks that I contact. Other than that, enjoy. Hopefully your team's winning. You're seeing family. You're grinning. We will continue to watch this market, because right now we're still only on this little rally we've had recently in the 5th inning. I didn't even mean to rhyme on that, and I'm not even sure the game might not get postponed if the dollar and rates keep going higher. With that being said, until next time, Jonathan Camarda. Pleasure.